Some interesting top stock picks now from our panel members. Tracy, you have an oil driller.
Yes, Helmerich and Payne. Their ticker is HP, not to be confused with Hewlett-Packard, which is HPQ. A lot of people get it mixed up. But the drillers have been really hot. Helmerich and Payne has beat the Zacks consensus for 8 quarters in a row. The shares are at now 5-year highs. This is all about the domestic drilling play, and these guys contract out with all of the oil companies. So they have keep announcing all these new rigs that are being put under long-term contracts, and they just announced another 9. They've announced 44 additional rigs for this year. They have over 300 rigs. So all this stuff goes to their bottom line. They've earnings are expected to grow double digits this year by about 11% and about 12% next year. They're a little expensive now, not awful. They're trading about 17 times, but they're not as cheap as even a year ago because the stock has soared. A couple of the analysts have downgraded the shares just in the last week after they just reported earnings. They haven't downgraded estimates. It's still Zacks number 1, and estimates are rising, but they have downgraded based on valuation. So it is something to kind of look at. 17 times isn't super expensive, I don't believe, for this company. But they're a little concerned that most of the growth might be already priced in. But I still like the drillers. This is a big story for this year, and the energy plays are also hot for this year.
You mentioned domestic. I just heard over the weekend, and I don't know if I'm late to this news or what, but we're drilling now pretty successfully in Kansas.
Really?
Yeah.
No, I haven't heard that.
Yeah.
Okay, well, these are the kinds of companies that would be involved in things like that because they'll contract out with, whatever oil companies are going in there. So yeah, I mean, it's amazing the amount of locations now that we're actually drilling.
All right, Dave, you have an electric utility. I'll let you pronounce the name.
Yeah, see, I'm a little rusty on my Portuguese.
Okay.
But it's Campanhia Energetica.
Okay.
I think I did that all right. CIG is the ticker.
All right.
And yeah, it's a Brazilian utility company. So it's kind of you got twofold. First, you got the exciting part of Brazil and that kind of emerging market sort of infrastructure that's taking place. But you also have the World Cup that's coming down to Brazil, this summer. So I think a lot of eyes are going to start shifting, that way. And they've got the Olympics in a couple of years too. So they definitely have a lot of work to do down there. But from a technical standpoint, I really like the stock because we came down from like a huge high, and the stock, kind of crash landed down in the 4s and 5s. Really, kind of looked bad. And then recently, with a couple of decent earnings reports, it's kind of come back to life. So right now we're sitting at like 730. It's well above its 25-day moving average, shifted to the right by 5. That 25.5 I like to use and confuse everybody with. So it's sitting firmly above support, close to the old 52-week high, so I think it should break through and we'll be all right.
All right, Nina, you have an agricultural fund.
Yes, it's the PowerShares Agriculture Fund. The ticker is DBA. Now, the broader measure of inflation is still low, but food inflation has been going up this year. The prices of wheat, corn, coffee, soybean, hogs, cattle, everything is up. And the reason is that unusually dry weather in many parts of the world, corn-producing parts, and as well as the tension between Russia and Ukraine, because that region is also one of the major producers of and exporters of grain in the world. And then additionally, many weather analysts predict that El Nino will return this year. So this is a weather phenomena which causes widespread weather disruptions in many parts of the world, including flooding in some parts and drought in others. So that is likely to further cause a spike in food prices. And looking at the longer term as well, as the global population is growing, food prices will continue to do well in the longer term. So this fund is a low-cost and convenient way of getting exposure to agricultural commodities via futures. Top holdings include corn, soybean, sugar, live cattle, etc. And it is one of the most popular agricultural funds, commodities funds, with more than 1.6 billion in assets, charges an expense ratio of 1.01%.
Okay, thank you all for that. And we always remind you that if you're watching this out in syndication land, get on over to Zacks.com, check out other stock picks, stock picking strategies, and other interesting information, you're able to link to it all, I should say, off of the homepage at Zacks.com. With everyone here, I'm Terry Ruffalo.